Retailers, they've been reporting pretty good numbers recently. People are indeed spending money. I'm calling this the year of the consumer, certainly the end of the year of the consumer. Disney, Apple, Amazon, all on a tear. They are they're Stu's holiday winners, if you like. Come on in, David Nicholas, he's with us. How big will Black Friday be, Friday of this week?
Yeah, Stuart, it's going to be big because there's really a lot going for this consumer. I think you're right. I think this is the year for the consumer. Unemployment's at a 50-year low. Job growth has been strong all year. Wages are continuing to rise. Savings for U.S. individuals are at 8%, some of the highest levels that we've seen. So I think Black Friday and even Cyber Monday, these numbers could blow away, I think, more than what most analysts expect. The other thing, too, is this time last year, Stuart, if you remember, the stock market dropped almost 20% between October and December. This year, the complete opposite is true. S&P is up almost 25% year to date. Individuals have more money in their 401ks, in their retirement accounts. By every technical definition, the consumer is strong and they have money to spend. So I think this is going to shock most analysts for Black Friday and Cyber Monday.
Is there also the wealth effect? And by that I mean people's 401ks, IRAs, they've really done extremely well. They're up 30, maybe 35% since the election of Mr. Trump. The money is there. Is some of that money being taken out and put into spending at a consumer level?
Stuart, I think that's a great point, and not a lot of people bring that up. I think you're exactly right. The wealth effect right now is adding confidence. So if you're an individual investor right now and you look to see what you've made in your 401k, that's real money. That then justifies that, maybe I am going to spend a little bit more for my kids or my grandkids this Christmas. So I think you're exactly right. The wealth effect is real. So as investors, we want to own companies like a company like Walmart, like Target, even Best Buy, who had great earnings. It's only trading at about 14 times earnings. So certainly not overvalued. So there's some great companies out there to own. If you want a flyer, Macy is only trading at 6 times earnings. It's not a guaranteed play, but it could. I don't think the story is going to be as bad for retail. So Macy could be a play if you're looking for a pop on the upside.
But you have to admit, though, that investors, our viewers, are going to be a little nervous about putting money into a stock which has already hit a series of highs. There's a lot of reluctance on people to buy as it's going up to new highs,
I agree, Stuart, but look, it's all about the earnings. If a company continues to be profitable, and I understand Best Buy, it's been up, I think the stock's up quite a bit year to date, but again, forward earnings, 14 times. Stuart, you can't tell me that that's overvalued. So I feel confident when I look at the forecast for a company like Best Buy that it still could be a good time. That stock could be trading easily over $100 a share this time next year. There's a lot that has to go right for Best Buy, but I still think there's upside. Retail hasn't performed as well as the S&P this year. I think retail is what you want to own going into this fourth quarter.
It's a retailer's dream, the fourth quarter of this year, and that's a fact. David, thanks for joining us. Have a great Thanksgiving, young man.
You too, Stuart. Thank you.
Thank you.